Dipan Mehta joins us now. And Dipan Mehta, we are talking about how UP has now become really the go-to place when it comes to religious tourism. No one would have thought that this kind of a number would actually be there in terms of footfall for Banaras and now for Ayodhya. Is that the theme which you are betting on?
Yeah, good morning, Nikunj, and thank you for having me on your show. Yeah, I mean, we're very positive on travel and tourism, and I've spoken about Indian hotels and interglobe aviation also. And then there's, of course, our favorite with disclosures, Mahindra Holiday, which I think is, below its perform below its potential. So, first of all, there are very few plays in this particular investment theme, but whatever is there is, I think, has got great long-term prospects but is kind of fairly valued at this point of time. And these are great secular trends, Nikunj. You can see them compounding at 15% or thereabout for next 5, 10 years or so. And in India, always we have to be very positive on the consumption trend. And this is one segment of the consumption strength that can only go from strength to strength over the next few years or so. So positive on the investment theme. But as I said, there are very few ideas that one can actually invest in. At the same time, these are kind of fairly valued at this point of time, so better to buy them at a correction.
Is your approach this year in terms of the market? Would you be holding on to your stocks? Would you be looking at taking some chips off the table ahead of elections, maybe raise some cash, or you would just maintain status quo?
No, Nikunj, raise cash. At every given opportunity, at every rise, we want to raise more and more cash as we go along. It's not that we're going to be 100% in cash, but I think investors should be at least gradually reaching that 15, 10, 15, 20% levels in cash with every rise in the stock market. Because I think in terms of valuations, it's pretty much fair. And I'm not completely happy with the momentum indicators which have come so far, be it GST collections, automobile sales, cement sales, even what the banks have disclosed in terms of advance growth. And it's not that they're doing badly, it's just that the base effect is catching up very fast for Indian companies. And to that extent, I think we should expect at least year-on-year numbers for December, maybe March quarter, to be slightly tepid. At the same time, you could always have a minor, I would say, demand slowdown even in a very positive economic environment. From that point of view, I want to be a bit cautious. I don't think any geopolitical factor or liquidity issue will cause a correction. It'll be caused more by, I would say, disappointment in earnings which may come through in December or March quarter.
Uh, so, Dipan, what are your top mid-cap holdings? Just to understand that, how are you positioned and why would you be, how are you approaching them? I'm just trying to understand your thought process here. And we are not discussing a stock idea here. I'm trying to understand the thought. You'll appreciate where this one is coming from. Pure curiosity and academics.
See, I think, we remain invested in the top holdings with disclosure are companies like Tata Elixir, Varun Beverages comes to mind, ITD Cementation, APL Apollo, then there is Polymed. We have a nice bunch of excellent blue chip companies, but I'm uncomfortable with their holdings. And because they are multi-bagger gains, you're uncomfortable selling them as well. So all I'm doing just now is whatever cash flows are coming through, I'm just sitting on it. I'm not investing afresh. And whenever a company I feel is not living up to its potential, like say something in specialty chemicals is, I think, largely underperformed, large cap tech underperformed, but I still am positive on that sector. So wherever we find that, the performance is not up to our expectation, then we are trimming or exiting those positions and remaining in cash. And that really has been my advice. I think I'm amongst the minority who feel that there should be a correction in 2024. All the kind of blue sky scenarios notwithstanding, these markets just cannot keep on going up like this. Sometimes the law of averages does catch up. And I have this theory about leap years, where a lot of problems do happen during leap years, as we have seen in 92, in 2000, 2008, 2012, 2020, and now we are in 2024.
Expectation when it comes to earnings within the IT space come tomorrow. It all begins with the heavyweights. Recent reports are talking about strong growth rate, strong order book, segmental revival, and that the downgrade cycle may end in Q3. Do you concur? Where do you stand?
See, I'm looking at not looking at the actual performance of the IT companies, and I'm more going to be more focused on management commentary. because this will be the first IT season, IT earnings season after the Fed has clearly stated that the interest rate cycle is turning over there. And a lot of the uncertainty in the US economy, led by high inflation and high interest rate, had put a restraint on IT spends. Although these companies are sitting on very large multi-year, multi-million dollar order book position. So it's just that execution was slow, discretionary products was slow. I want to see how that has changed in this particular earnings season. Are they seeing positive commentary from their customers? See, because IT spends are secular. I mean, every 2, 3 years there is some new wave. Today it's generative AI, and some of the other related technologies. Tomorrow it could be something else. So, as a business owner, you are constantly investing in software, and I've seen that in our own business. And you may also have noticed in ET now also that you are constantly investing in hardware and software just to keep the systems going and improve efficiency and productivity. So if you have the confidence that the business will do well, then you will undertake those expenses. And that is the key question to ask the IT managers this time, that are they seeing revival of confidence in spending for the future? The numbers, I think, are largely discounted. There will be a disappointment as we have seen in the September quarter. So don't read too much into that. Stocks will somehow discount the future, and not we have seen for the December quarter.
That leap year theory is very interesting, right? Every 4 years something happens and you actually write about it. I just thought through it what you just mentioned. So if that is the logic, then we are in for what? A straight line decline.
Yeah, Kunal also was anticipating that, right? Kunal, you also dug out the patterns, right, for leap years or every 4 years?
Yeah, every 4 years.
Yeah.
That's the thing. Then January was the other effect which is playing out for the indices, and then the near-term weakness, of course. So I think on the base of all of this, we would probably expect the volatility and the trend to be a bit more swifter on the downside.
Okay, just looking into that right now and bracing ourselves. But you think, Dipan, that I mean, typically when markets do fall or correct, even in intact bull markets, it's a sharper decline for the mid and the small caps. You think this time around it could be different? Because there are many large caps out there which are underperforming. Large cap outperformance as well is in very specific pockets. It's the mid caps and the small caps which everyone's been chasing. And that's the one, that's the pocket where you are seeing companies deliver those kind of growth.
You're right, I think. And another theory I have, again, I'm sharing with you, and I reserve the right to be wrong, is that even if we don't have a steep correction in the Sensex and Nifty, we will see the markets narrowing. I mean, you will just see 10, 15 Sensex, Nifty stocks maintaining or delivering returns, and you may see a correction in large swaths of small mid-cap companies. And actually, investors' portfolios may underperform. See, last 2 years, investors' portfolios have done really well. If you benchmark it versus the Sensex and Nifty, I think that trend is most likely to change as well, because mid-caps are priced to perfection. I mean, even a slight miss in their earnings and investors could get disillusioned, because end of the day, there's a lot of trading positions also over there, and there's not that much liquidity. Or once the result comes bad or something goes negative, for a stock to decline by 15, 20, 30% is nothing. It takes maybe a few trading sessions or so. So from that point of view, also I'm a bit cautious on small mid-cap companies. I mean, great quality businesses can trade at high P multiples, but they could have a quarter or two where the earnings are soft, and that certainly can cause a correction. Whereas the likes of Reliance, HDFC Bank, ICICI Bank, the large ones, Larsen and Toubro, they continue to deliver, and then you have these FI flows also coming in, which is holding those stocks up. So it's easily possible that you may have a phenomena where you don't see really a correction in small mid-cap stock if you look at the headline indices.
Dipan, from the start of the year till now, have you eased off positions from anywhere, trimmed anything?
Yeah, absolutely. I think, I mean, I'm being candid enough to say that, we are sitting on some amount of cash, and with every rise, we are looking at adding more to our cash positions. Thankfully, we are in the broking business, and Nikunj, broking capital market activities are doing exceedingly well. You see the numbers from Angel Broking or Motilal Oswal, some of the listed stock broking companies. So these are great times. from a stockbroker perspective. So we are having strong cash flows with the grace of God. So we're just not investing those cash flows into fresh equity as was the strategy which we always followed. It's just that we're just staying back for some time. And as I said, wherever the results are not looking that great, we're looking at exiting those positions. Like Quest Corp is something which I sold after holding for many years because it just didn't live up to our expectations. And you won't believe, even a travel company like Thomas Cook we sold because again the numbers never came through despite so much of potential. So yeah, I mean we're looking at exiting positions where companies which we thought were great buys 2-3 years ago, we invested in them, patiently waited, but the numbers just did not come through.
Okay, Dipan, great chatting with you. And by the way, it rained today in Mumbai, so hoping there could be some green. Dipan has this theory that each time it rains, the markets will do well.
That's for the monsoon
In
season.
4 months in Bombay a year.
Yeah.
Dipan हर बार थोड़ी green होता है.
Not har bar, pehli bar.
Okay, first time it rains.
Yeah.
So Dipan Mehta, next time we should be using that as a theory, right? Get the weather right for the first.
That theory is applicable only to the monsoons, please.
Okay. January rain not allowed. Achha, this new theory I like the leap year theory. This is a rain theory, man. This is a new one, Dipan.